recognize myself for an opening statement. I would like to thank Secretary Bessent for being here today and for his leadership and his steady hand over the last several months. We are living in an increasingly complex world with no shortage of issues. Whether it be taxes or tariffs, right-sizing regulation, or creating a regulatory framework for digital assets, the Department of Treasury's role is fundamental to their resolution. If we think about it, this is why the Department of Treasury was created. The department is central to maintaining a strong economy, creating jobs, and promoting economic growth, both here and abroad. It was created to bolster our national security and to assure our economic stability, and it continues to thwart terrorists and criminals and protect the financial system from illicit activity every day. Fulfilling these responsibilities is no easy task. As the department's fiscal year 2025 spending plan reveals, it takes significant resources. It starts with a strong workforce, the most updated technology, and the appropriate working conditions, including buildings that are sufficiently maintained. But this doesn't happen in a vacuum. It also takes cooperation, transparency, and accountability. As this committee looks to fund the department's future operations, we need to understand the priorities and how the department is deploying resources across its divisions and bureaus, and why. There are definitely efficiencies to be identified, but changes need to be thoughtful and deliberate to ensure the department's mission is still accomplished. We need to ensure our financial system, the economy, and leadership around the world is safe, secure, and thriving. Secretary Bessent, there are and will be challenging times ahead, but I believe you are the right person at the right time to overcome those challenges. I look forward to working with you, and I now recognize the ranking member for his opening statement.
Thank you very much, Mr. Chairman, and welcome, Mr. Secretary. This is our first substantive hearing dealing with the devastating actions that the Trump administration has taken in the first 3 months of 2025, actions planned and predicted by Project 2025. I look forward to having more such hearings with other agencies under our jurisdiction, especially the principles of Doge, OMB, GSA, and OPM, which are having such profoundly negative impact on our country. What we've seen in the first 100 days of this administration is unprecedented, and so the polls tell us, disturbing to the American people. An irresponsible, incoherent tariff policy has plunged the Americans and global economies into chaos. These past 3 months, the American economy shrank for the first time since the final days of the pandemic. The stock market fell more in the first 100 days of the Trump administration than in the first 100 days of any presidency in the past half century. Consumer confidence is at its lowest since May of 2020, the height of COVID-19. That uncertainty has also rattled the bond market, with investors dangerously starting to doubt the full faith and credit of the United States. Most importantly, Americans are hurting. Families see their costs going up. Retirees watch their life savings losing value. Small business owners and farmers risk going under as they struggle to navigate ever-changing tariffs. Our economy is in chaos, and so I think is our government. Donald Trump, Russell Vought, and Elon Musk are orchestrating an illegal purge of our federal employees. They clearly had a lot of ideas on how to remove these people and dismantle these programs as quickly as possible. Sadly, they had no clue, in my view, as to the devastating consequences of their actions on our country, our government, our allies, and the professionals we rely on to serve the American people. I am particularly concerned about the Internal Revenue Service, which has been severely understaffed and underfunded for decades. So far, the Trump administration has forced the IRS to cut as many as 11,443 employees, or over 11% of its staff. That includes 6,700 workers who were fired at the height of this most recent tax session. Now the administration is planning to reduce the IRS workforce, I understand, by another 40,000 jobs, or 40%. That includes up to half of the IRS enforcement staff. Additionally, Trump's 2026 budget cuts funding for the IRS by 20%. These actions at IRS, in my view, and every other government office, have bludgeoned morale, destroyed efficiency, and increased waste. Cutting back on IRS enforcement makes it easier for the wealthiest individuals and corporations to cheat on their taxes and get out of paying what they owe. That, of course, increases what others pay and explodes the deficit. As the president and congressional Republicans undermine the ability to enforce our existing tax code, they are also pursuing massive tax cuts for the wealthiest among us. Furthermore, Doge operatives are rifling through IRS databases that contain Americans' sensitive information, including their financial history, social security numbers, immigration status, and more. The story is the same across the federal government. Americans are reeling from this uncertainty in their economy and in their government. They need answers. More than that, they need an adult in the room. That is the role I hope the Treasury Department plays, and Mr. Secretary, in particular, yourself. The economy and markets do not lie. We all depend on the Treasury Secretary to communicate clearly and transparently to the President, the Congress, the American people, and indeed the world. I've mentioned tariffs and the IRS, but I'm also eager to hear, Mr. Secretary, from you about our economic approach to the Russian-Ukraine war, especially in light of last week's mineral deal and recent questions about our sanctions regime on Russia. Former Secretary Mnuchin, whom I believe you know, sir, and I disagreed on some things, but we still found ways to work in a bipartisan fashion to inspire confidence in the economy. Mr. Secretary, I look forward to doing the same with you. Thank you, Mr. Chairman.
Thank you, Mr. Hoyer. Today we welcome the testimony of the Honorable Scott Bessent, Secretary of the United States Department of Treasury. Secretary, without objection, your written testimony will be entered into the record. That in mind, we ask you to please summarize your opening statement in 5 minutes.
Good. Thank you, Mr. Chairman, Congressman Hoyer, Ranking Member, the Chairman Joyce, Ranking Member Hoyer, and members of the subcommittee. I'm grateful to join you today. Treasury is eager to work with members of Congress to fund key priorities to strengthen our economy, and we look forward to coordinating with you on the President's budget as soon as it is released. Today, I wish to highlight the Department's efforts to boost U.S. economic growth, improve government efficiency, and target illicit actors that threaten our national security. The core components of the Trump economic agenda are trade, tax cuts, and deregulation. These are not standalone policies. They are interlocking parts of an engine designed to drive economic growth and domestic manufacturing. Tax cuts and cost savings from deregulation raise real incomes for families and businesses. Tariffs create an incentive for reshoring jobs and fair trade. And deregulation complements tariffs by making it easier to invest in energy and manufacturing projects. Already, this agenda is bearing fruit. In the first 100 days of the new administration, 464,000 new jobs were added to the economy. In April alone, over 177,000 American jobs were added, more than 40,000 more than economists predicted. All the while, unemployment remains low while real hourly wages continue to grow. As important as spurring job growth is wrangling inflation. And in this endeavor, the administration continues to make tangible progress. The CPI for energy goods declined in March, as did the price index for core goods. And the CPI for all items declined for the first time since the COVID pandemic. While the cost of goods is decreasing, so are energy prices. Complementary to our efforts to grow American prosperity, we are focused on improving efficiency across all levels of government, but especially the IRS. We just concluded a successful tax filing season, but the IRS still needs significant reforms to deliver efficient and cost-friendly results for the American people. In this endeavor, we have successfully cut $2 billion from the IRS IT budget without any operational disruptions. We achieved these cost savings by eliminating, renegotiating, and de-scoping wasteful IT and professional services contracts and addressing long-standing inefficiencies, such as auto-renewed licenses unused for years. This intervention alone will save taxpayers hundreds of millions of dollars each year. We are also taking steps at the IRS to reduce administrative costs with a particular focus on paper processing, which has been a long-standing bipartisan goal. Last year, the IRS spent approximately $450 million on paper processing, with nearly 6,500 full-time staff dedicated to the task. Through policy changes and automation, Treasury aims to reduce this expense to under $20 million by the end of President Trump's second term. In addition to making government more efficient, Treasury is committed to working alongside the White House to make America safe again. To that end, we have launched a maximum pressure campaign against violent cartels and terrorist networks. We have assessed tens of millions of dollars in civil penalties against organizations facilitating money laundering along the southern border, and by leveraging sanctions, we are choking off the financial lifelines of terrorists, criminals, and hackers from Mexico and Guatemala to China and Iran. In the first 100 days of the new administration, we have set the table for a robust economy that allows Main Street to grow. With Congress and the White House working hand in hand, we expect to see even more positive results over the next few months. Key to expanding economic opportunity for all Americans is making the Trump tax cuts permanent. We look forward to working closely with the members of this committee to pass this bill into law. Together, we can build a stronger, safer, and more prosperous America. Thank you.
Thank you, Mr. Secretary. I now recognize myself for the first questions. Secretary, let's fast forward a year. Where do you see the U.S. with respect to tariffs and the overarching strategy? Do you anticipate all trade deals being bilateral, or could there be multi-country trade pacts of which groups of countries agree to a tariff schedule?
Mr. Chairman, this will be path dependent on our trade partners. As I've said before, there are 18 very important trading relationships. We are currently negotiating with 17 of those trading partners. China, we have not engaged in negotiations with as of yet. So I expect that we can see a substantial reduction in the tariffs that we are being charged, as well as non-tariff barriers, currency manipulation, and the subsidies of both labor and capital investment. So that is proceeding very well. Many of our trading partners have approached us with very good offers, and we are in the process of renegotiating those. With the economy, I would say that this is a three-legged stool: trade, tax, and deregulation. Trade was first. The House, according to Speaker Johnson, expects to move their portion of the bill over to the Senate on or about the Memorial Day, so we're looking forward to that. And then deregulation necessarily takes longer to affect the economy, but I would expect in the third and fourth quarters, we would see substantial benefits from deregulation that by this time last year could be at full force.
We've seen a few numbers discussed in terms of how many countries with whom you have started tariff negotiations. What is the actual number, and what is the status of those negotiations? How many deals do you anticipate by the end of the year, in the first quarter of 2026 or the second quarter? And what are the biggest challenges you see to negotiating tariffs and getting trade deals done?
Again, sir, approximately 97 or 98% of our trade deficit is with 15 countries. 18% of the countries are our major trading partners. And I would be surprised that if we don't have more than 80 or 90% of those wrapped up by the end of the year. And that may be much sooner. That I would think that perhaps as early as this week, we will be announcing trade deals with some of our largest trading partners. They have come to us with very good offers. And what I will tell you is that in negotiating with some of them, they may not like the tariff wall that President Trump has put up, but they have them. So if tariffs are so bad, why do they like them? And then more insidious, we can see that from a practical matter and from academic research, are the non-tariff barriers. If you were to look prior to the escalation, I believe Chinese tariffs are only 5%. So clearly there's something else going on if they're accumulating these gigantic surpluses.
The president released his skinny budget for the year, fiscal year 2026 on Friday. Budget calls for approximately $2.5 billion cut to the IRS. As you know, Congress has been pulling back money from the IRS over the last several years, somewhere in the range of about $41.7 billion. Some may ask, what's left to cut from the IRS? What would you talk about your vision for the IRS and why streamlining operations will benefit taxpayers and not hurt them?
Well, Mr. Chairman, the IRS is 30 years behind on an IT modernization project where perhaps up to $50 billion of taxpayer money has been wasted. We are right-sizing that. So the substantial decrease in the IRS budget is largely in IT. We have had a large number of employees take the option for early retirement or for retirement. And again, let's look at the numbers. We are just taking the IRS back to where it was before the IRA bill substantially bloated the personnel and the infrastructure.
Thank you. And now recognize Ranking Member Hoyer for any questions he may have.
Mr. Chairman, let me ask you a broader question, Mr. Secretary, at the outset. The President has been talking about recession and the acceptance of a recession in the short term. Do you believe we're in a recession now?
Congressman, I believe in data, and there is nothing in the data that shows that we are in a recession. As a matter of fact, the jobs report has surprised to the upside.
The job report, of course, less than the average for the Biden administration last in 2024. But the GDP went down this first quarter of the Trump administration. If we have a negative growth in the second quarter, which is, I suppose, the traditional definition of a recession, would you agree that we are in that recession of which the President speaks?
Yeah, Congressman, these economic numbers are noisy and subject to substantial revision. So I, having looked at a detailed analysis, would believe that the first quarter GDP would be revised upward. And I would also, with regards to your remark about where we were last year, we were spending 6.7%. We had a 6.7% fiscal deficit, the largest we've ever had during peacetime or non-recessionary times. So the easy thing would be to keep spending, to keep the economy running on an unsustainable path of government spending.
Let me remark, because you mentioned this, I think in our meeting, we had a spending problem, not a revenue problem. I want to talk about the revenue problem. Let me suggest to you, my view is it's neither a revenue nor a spending problem, it's a pay-for problem. If we would pay for what we buy, whether it's defense or non-defense, we wouldn't increase the deficit. So I think looking at, I'm a big proponent of paying as you go. Unfortunately, we haven't pursued that on either side of the aisle, maybe for different objectives. Let me go to IRS. You probably know these figures, and these are somewhat old at this point in time. But what they reflect, as you will see, is a substantial decrease in the resources of the IRS, particularly in enforcement. As the blue representing an increase in filings, the orange representing the nominal, and the dotted line, the net actual value of the funding for IRS, particularly enforcement. The budget proposes substantial cuts. Have you or anybody done an analysis of the ramifications of those cuts, both in the short term and in the long term, in terms of your ability to collect revenue? Let me paraphrase, not paraphrase, but give a, in your discussions, you said you were not going to sabotage that we had in my office, sabotage collections. Are you confident, in light of the fact that any IT, and I agree with you, we've wasted a lot of money on IT, that any IT will be accomplished within the next 36 to 48 months, and therefore justify a reduction in personnel?
Congressman, let me work backwards there. So I am confident that we will make substantial progress in the IT and right-size the payment system, the collections system. As I've repeatedly said, my priorities are collections, privacy, and customer service. And again, the substantial increase in the enforcement group, there is nothing that shows historically that by bringing in unseasoned the collections agents that results in more collections or high-end collections. It would be like sending in a junior high school student to try to do a college level class. That becoming a high-end IRS collections agent is something that one grows into. So I believe through smarter IT, through this AI boom, that we can use that to enhance collections. And I would expect that collections would continue to be very robust as they were this year.
Chair now recognizes the gentleman from Arkansas, Mr. Womack, for any questions he has.
Thank you, Mr. Chairman. And thank you, Mr. Secretary, for your service and for being here today in front of my colleagues. I'm going to ask a question that I'm sure you've never been asked before, but I'll give it a try here. When is X date?
Congressman, we are, as I said earlier, we still take in a large amount of the paper returns. So every Friday, I get a summary, and if you can believe it, as you know, tax day was April 15th. We are still tallying that. So that we will share with Congress when we believe we are approximating that date. So that will be forthcoming. But I will tell you, just as an outfielder running for a fly ball, we are on the warning track. And when you're on the warning track, it means the wall's not far away.
So it's not today, may not be next week, but it is fast approaching.
And of course, the United States government will never default. That we will raise the debt ceiling, and Treasury will not use any gimmicks. We will make sure that the debt ceiling is raised.
You have already answered a couple of questions about the president's budget, and I'm going to ask maybe a little differently. The president's budget request for fiscal 26 looks very different from President Biden's budget just last year, and I have been a longtime proponent of getting our fiscal house in order, and I applaud the president's attempt to get our fiscal house in order. During my tenure as chairman of the House Budget Committee many years ago, I co-chaired the Joint Select Committee on Budget and Appropriations Process Reform, and many of our recommendations are included in Trump's requests. It's no secret we're heading toward a big and needed change within the federal bureaucracy. That said, his budget request for the Treasury is $11.5 billion compared to FY25 enacted at $14.2. Now that's a 19% decrease. You've already mentioned that we have savings achieved in contracts regarding IT services and this sort of thing, and we've saved the American public a lot. But you've also said that IT remains one of our biggest challenges, particularly within the IRS. So how is it that you're going to operate with a smaller budget that still serves the needs of the American people?
Sir, Part of that has been bringing people back to the office. So on March 10th, we reinstituted a work from your office program. And again, I think it's going to be efficiency. We have asked for more money for many of the priorities. The Treasury Foreign Intelligence Network and the Office of Foreign Asset Control, OFAC. So we will be keeping the American people safer. And again, we think through efficiency gains, the federal government historically does not have productivity increases. And as I've continually pointed out, Doge is the Office of Government Efficiency, not the Office of Government Extinction or Eradication. So I think that it is not a big leap to do much more with less.
Are there $2.5 billion worth of efficiencies?
Well, again, just two of it is in the IT department. And if you were to look, Treasury processes about 1.5 billion payments per year, which is like a mid-sized U.S. regional bank. We have had many of these banks come in and talk to us about their payment programs, and their departments are 1/10 the size and 1/10 the budget. So allowing for the redundancies that we would need as a government agency, then we think that we do need to be bigger and more fulsome, but there are substantial savings to be had.
I want to ask one more quick question, because I know we're probably not going to have a second round. You have been a proponent for better financial literacy in this country, and your background is, is evidence of that. Quickly, can we do a better job in this country of educating young people on matters of financial literacy?
Any increase that we do would be a better job. We just hosted Financial Literacy Month at the Treasury. I only had 2 months to get ready for it. I can tell you that every April we're going to do more and more, but the key to financial independence is financial literacy, making good choices, and not, I don't think it comes from more regulation. I think it comes from more financial education.
Thank you very much.
The chair now recognizes the gentleman from Wisconsin, Mr. Pocan, for 5 minutes.
Great. Thank you, Mr. Chairman. And thank you, Mr. Secretary, for being with us. My main concern is, I think, what people are looking at the economy. The first 100 days, lowest stock market since Richard Nixon, not usually a measure people are shooting for. On tariffs, the fact that last year we had an effective rate of about 2.5%. I think the Yale Budget Lab, and I believe you went to Yale, has said that effective rate is closer to 28%, the highest since 1901. I know that some of that's changed because the tariffs are on again, off again, some on again, some off again, somewhat chaotic. I believe as your term is crazy Ivan style. I compare them to how a monkey throws dung. You're not exactly sure where they're going to land. And that's the concern I have as a small business owner. And I know Ms. Luzenkamp-Perez is as well. I've got small businesses really worried. You made a comment about while cargo volumes have dropped 60%, you see this as a temporary detox. But for a small business that's getting by day to day, that's much bigger. You talked about Main Street. We want to finally focus on Main Street, not Wall Street. I think you were at a global investor conference in Beverly Hills yesterday. That's the cocktail party where you mentioned the crazy Ivan theory. And before that, you were at a JP Morgan Chase World Bank private investor summit. All those things are not Main Street, right? Main Street is an auto body repair, a specialty printer. So my concern is on the tariffs. Who pays tariffs, Mr. Secretary? No. Answer the questions I asked, please. I only have 5 minutes. Who pays tariffs?
Sorry, well,
who pays tariffs?
Sorry,
Mr. Secretary, please.
Excuse me.
The question is very simply, who pays tariffs, Mr. Chairman? I'd like him to answer that question.
Well,
He wants to answer other questions.
Well, Congressman, if the exporters, they dislike tariffs so much, why wouldn't they? If I think what you're trying to get me to say.
Did you remember the question? I'm not sure you did. Who pays tariffs?
That It's a very complicated question.
Reclaiming my time. People pay tariffs, right? Reclaiming my time, Mr. Secretary. Reclaiming my time, Mr. Secretary. Reclaiming my time. You clearly aren't going to answer. I'm not going to waste my time having you go, Mr. Secretary, reclaiming, Mr. Chairman, I asked reclaiming my time.
Tariffs.
Mr. Chairman, and I asked to reclaim my time. Did I not? No, I said reclaiming my time because he's clearly not answering it. So, yeah, so as a small business owner, and unfortunately I'd like that time back since you failed to recognize me for 30 seconds. So I just recently from one of my suppliers got the tariff surcharge on things. And in addition to the tariff surcharge, guess what else got raised? American-made walnut plaques. That has nothing to do with tariffs, but companies take advantage and do that. So right now, we are getting screwed right and left because of the indiscriminate use of tariffs. That's the reality for Main Street. And you go off to Beverly Hills for private investor conferences and talk about crazy Ivan theories. Answer that. What is the crazy Ivan theory of tariffs that you mentioned at the summit?
Well, first of all, sir, I've had meetings with more than 50 small lenders. So I want to clarify that. I would also say that in game theory, strategic uncertainty, of which you seem to like the name Crazy Ivan.
Well, it's your words, correct? Didn't you use Crazy Ivan at the?
Well, you've used it 5 times, and
that's the question, Mr. Chairman.
I am saying the strategic uncertainty is part of negotiations. Should we say, here's what we'll accept. Please take this.
Okay, I've got your answer. Thank you. I'm going to reclaim my time again. So for a small business, we don't have that luxury, right? When the ports are empty in California and we can't get goods and people are stocking up for Christmas goods, Crazy Ivan is great for, please don't take this offense, really rich people like you. But for people like me, it's not, right? That's what makes small businesses fail. That's what makes people lose their jobs. That's what makes the stock market tank. So I'll ask one more time, who pays tariffs?
Sir, the history would show that it is a complicated mix of who pays the tariffs over various times.
So that's exactly the problem. If your answer, and you are a very educated person, you have a very impressive bio, cannot answer the question who pays tariffs because you won't answer that, and you say it's a complicated issue. It's not complicated. Consumers pay Trump's tariff tax. That's the reality. And I'll yield back, Mr. Chairman, but I do think next time if I ask to yield back, I would appreciate having my time yield back.
Chair now recognizes the gentle lady from Iowa, Ms. Hinson.
Thank you, Mr. Chairman. Good morning, Mr. Secretary. Thank you so much for taking the time to come and answer our questions. I appreciate what the Trump administration is doing to try to level the playing field for American consumers and restore our economy to where it needs to be. So I really appreciate the work that you were doing to make that happen, Mr. Secretary. And I certainly, as an appropriator, recognize the importance of making sure that every tax dollar is spent appropriately, and I appreciate your opening comments as such. So with that, the GAO estimates the federal government loses between $233 and $521 billion annually to fraud. Those are alarming numbers, hard-earned tax dollars just wasted. President Trump has certainly acknowledged the absurdity of this level of waste, and he signed Executive Order 14249 to protect America's bank account against waste, fraud, and abuse. And I was proud to support this effort by introducing a piece of legislation to codify that, the Protecting American Taxpayers from Wasteful Spending Act. One of the provisions of this EO is directed at your department, the Department of Treasury, to establish pre-certification and pre-award procedures across the federal government to prevent fraud and improper payments. So can you define for the committee today what an improper payment is and some examples of what you're seeing and why these procedures were not already in place before, Mr. Secretary?
Well, it's a bit mystifying why they weren't in place. And what we are seeing is that there was a very complacent upper level of management in many departments across the entire government. What I can say at Treasury, that of the 1.5 billion payments we send out every year, they're required to have something called a TAS, a Treasury account symbol. We discovered that more than one third of those payments did not have a TAS number. So as the Appropriations Committee, you should be shocked by that, because how can a payment be tracked back to an appropriation? Only through the task number. So there was no accountability. So that is why the 450 organizations that sit above Treasury, where Treasury acts as the paymaster, are unable to pass an audit. So we have the crack down on that. Every payment now requires a task number. Very simple. And I will tell you that the mid-level employees who I have had come into Treasury to talk to me about that feel liberated. That they have, they tell me, I've been here 20 years. I've always wanted to do this. I've been here 14 years. And they feel as though they now have agency and are making a difference towards saving the American taxpayer money.
So this is not only a complacency issue that you've fixed, but it's a morale issue for these employees who are helping to make the department much more efficient for taxpayers.
They're very energized by their participation.
Yeah, it's certainly unbelievable when you think about that this was not in place, and certainly it's we've got lots of examples from the previous administration of some of those catastrophic failures. Who would you say is benefiting from those improper payments, and how could a government agency really justify standing idly by while those errors were seeping into our system and making our government less efficient?
Can't speak to who was benefiting, but I can just speak to the attitude that has been shaken up, that this is okay, this is not okay, and this is taxpayer money, and we are charged with protecting it.
What other plans are in place to help implement that executive order? You've talked about the Treasury account symbol. Are there other things in that executive order that you are executing on today?
The president, as you mentioned, has passed. We are trying to go more paperless with the checks, with the very important checks that the citizens across the U.S. receive, whether it's Social Security, veterans benefits, tax refunds. There is a substantial number of those are stolen. So the president has issued an executive order to try to make that more electronic. That will protect the integrity of those payments as well as cut down on cost.
Have you been able to claw back any improper payments for the taxpayer, reclaim those dollars?
Yes, we've called back tens of millions of dollars.
Tens of millions. Well, look forward to continuing to work with you to improve those efficiencies and execute on that executive order. Appreciate the work you're doing at Treasury, Mr. Secretary. Thank you.
Thank you.
I yield back.
Thank you, Ms. Hinson. Chair now recognizes the gentle lady from Washington, Mrs. Glusenkamp-Perez.
Thank you, Chair. And thank you, Secretary Bessent, for being here. So I ran an auto repair shop before coming here, and I know that people who are turning wrenches, who are filing an earned income tax credit or tax return, they're about 4 times more likely to be audited. And I'm wondering if you could talk to me about what the plan is for ensuring that regardless of what income strata you're in, your probability of being audited is equitable.
Well, the Congresswoman, I think that was one of the problems with increasing the enforcement. There was nothing to say that there would have been more enforcement at any distributional level. So that what you were saying is that those receiving the earned income tax credit are more likely to be audited. That would have just meant more auditing. There was also a proposal to track small payments, $600 on Venmo and things like that, which has been pushed back also.
But what is the forward program to ensure that there is an equitable? I have some quarrels with what you said, but what is the plan, the implementation plan to ensure moving forward we are getting towards a more equitable enforcement rate?
Look, we are reviewing the processes for who is audited at the IRS. There's been a great deal of politicization of that. So we are trying to stop that. And we are also going to look at the distribution of who is audited and why they are audited.
Look forward to hearing more about how that is being implemented and how we can help you with that. So I think you and I agree that the current trading system has failed working people who are turning wrenches, driving trucks, changing diapers. Could you expand on how the proposed tariffs would ensure that there is upward pressure on wages?
Well, I think that there are many parts to that, but the key to upward pressure on wages is more job opportunities. And what we have seen since what the so-called China shock after China entered the WTO was a large decrease in manufacturing jobs. And studies have shown that workers in manufacturing jobs have more potential for large-scale wage increases than service workers do. So moving more workers from service work to manufacturing, they should do that. And the administration is also trying to bring down the cost for working families.
I agree, right? If you are trying to earn a living as a barber, you have to move to a city to earn a high wage. But if you're in a rural community where there's a factory job, you can own land, you can own your home. And I think one of your points about financial literacy is ensuring that we do have economic self-determination. You can buy the pair of boots that will last 5 years and not be in this pace. But there's a lot of work to do here, building real wealth and not the nominal kind of, I'm not really here to be a defender of the stock market. Most of the people I know don't trade stocks in my community. It's a question of being able to own land, having that capital access to start your own business, and frankly, some of the antitrust work to ensure there's a level playing field for small businesses like mine. I'm hearing from constituents who have questions about their tax returns and are having trouble getting a real person on the line to speak to. What can we do? What is your plan for decreasing wait times, for having somebody be able to actually talk to a human being when they call the IRS?
Well, again, this goes back to my three priorities: collection, privacy, and customer service. So we are moving money into customer service at the IRS. And it's almost imaginable that the phone banks had the same number of operators 24/7, 365 days a year. So if one of your constituents called on Christmas Eve, they'd probably get through because there were so many idle phones. If they called on April 14th, there was no surge to help them. So, as President Trump has repeatedly said, this is a common sense administration. So we're going to have common sense for the IRS. Playoff season is for the first, from January 15th to April 15th, game days April 15th, and we're going to make sure that it's better staffed then.
Thank you. I yield back.
Thank you very much. Chair now recognizes the gentleman from Texas, Mr. Cloud, for his 5 minutes of questions.
Thank you, Chairman, and thank you, Mr. Secretary, for being here. I think it was Albert Einstein who said that you can't solve problems with the same kind of thinking you used when you created them. And that's one of the things I certainly appreciate about you and the Trump administration and what you're bringing to the table. For a long time, we've seen the managed decline of America. And while many who run for positions that we hold will campaign on the need to do something, what we've seen is too often, and even because some of the politicking we've seen today, for the sake of politics, we've not been able to do the big, hard things that we need to change course and get us out of the $36 trillion debt pathway and growing pathway that we're on, leading to that wall that you talked about. The American people have watched this all play out, realizing that their nation's been in decline and seeing what they thought was kind of the promise that if we put the experts in charge, they would run the government, we would have a regulatory pattern that worked, the wealth gap would close, America would be strong, and that has not happened. What did the experts get wrong that you're correcting?
Well, sir, under President Trump's first administration, the wealth gap did close. That the bottom 50% of households by net worth saw their net worth increase substantially more than the top 10%. And we are aiming to do that again. That under President Trump's first term, hourly workers' wage gains were higher than supervisory workers. And look, what people got wrong was the shock. And there was this terrible policy of, it was essentially compensate the losers. And I do not think that the American workers are losers. They were simply cast aside as the necessary collateral damage in this unfettered free trade. And the free trade is not always fair trade, and we can see that from the large surpluses that these countries are accumulating on the other side. So we are aiming for fair trade to bring back high-paying precision manufacturing jobs to the U.S., and we are doing that. We're using tariffs, but we were also using the substantial deregulation, energy dominance. So we want to continue to make the U.S. an even more attractive location for manufacturing.
It's interesting you talk about manufacturing. I think it was in 2008, the intelligence community put out a report. I talk about it a lot because they said the greatest transition of wealth, power, and influence is happening right now. And this was some years ago. They said we expect it to continue, and it was going from the Western countries to the Eastern countries. And they said it was happening because we were sending manufacturing overseas and we were sending oil and gas revenues overseas. And yet they said it was like an unsolvable solution, yet we have the Trump administration who's coming in and solving what seems to be not an easy solution, but a very clear solution in bringing manufacturing back and bringing oil and gas back. And appreciate it. I wanted to ask you, because there was a comment about the bond markets, and certainly that's really is a concern. We need to make sure that they stay strong and that the dollar stays strong. Are the bond markets more affected by the tariffs and the concern we see in them now? Are they more affected by the tariffs or out of control debt and the fact that Congress can't seem to get our fiscal house in order?
Well, I will tell you that the large stock of government debt is why I'm sitting here now, as opposed to back in the private sector. I became so alarmed by what was going on under the previous administration, this deficit that we had, highest ever, that when we weren't at war or weren't in a recession, and it's unsustainable. And I thought it was deeply cynical. And if we'd done it, if we continued it, then we would have gone into a malaise where we couldn't grow ourselves out. We would have probably been forced into looking more like a European-style economy, very high government spending, lack of innovation, and lack of mobility.
And that would matter for us here at home, but certainly even for the world, because we've kind of been the innovation engine of the world.
Yes, sir. But what we've created in the U.S. is this barbell economy, and the Trump administration is attempting to remedy that. On one side, we have financial services and the tech sector, which are forward-looking and the envy of the world. On the other side, we are a natural resources economy led by energy, which the previous administration, they stopped permitting for LNG facilities. But the arc in between is what we are missing, are these manufacturing jobs, and that's what we are trying to bring back.
Thank you, Mr. Secretary.
Thank you. The chair now recognizes the gentleman from Maryland, Mr. Ivey, for 5 minutes of question.
I appreciate you being here today, Mr. Secretary. I want to ask you a few questions about Doge and the role it's playing at Treasury. You came into office, I guess you were sworn in on the 27th, was it? You were confirmed by the Senate on the 27th? Is that about right?
28th.
28th? Okay. And then you started working at Treasury immediately after that? All right, and Doge began working there as well with respect to the payment systems?
Two individuals from Doge who were actually Treasury employees were on site.
Okay. And I believe you were approached by the highest ranking career official at Treasury, David Lebrick. Am I pronouncing his name correctly?
I believe it's Lebrick.
Lebrick, okay. What was the nature of that conversation? I assume this was about the Doge issue, but tell me briefly what that conversation was about.
Well, that conversation was about a discussion of the payment system. And when I go back to what I didn't know, I think I walked in the office around 3 p.m. and I think he and I were having a conversation at 4:30, and
I got to ask for the short version.
Oh, no.
Okay.
But I will tell you that when we were talking about the tasks, that it was people like this individual who were hitting send on the payments. So, I've come to find out that he's part of the
Okay, I
problem.
apologize. I'll have to get that later from you.
Yep.
Feel free to send in substance of the discussion in a letter. But I guess what I was going to ask was, you just mentioned there were two people who were working with respect to Doge at the time.
Yes, sir.
And Mark Ilez was one of those?
I'm not sure.
Not sure? You're not familiar with that name?
I don't recall that name. I interviewed Tom Krause and personally recommended him to work at Treasury.
Okay. Well, Mr. Ilez had worked at Mr. Musk's SpaceX company. And the Wall Street Journal issued a story, I think around February 7th, that talked about statements that Mr. Ilez had made in the prior year. One was, you could not pay me to marry outside my ethnicity. Another was that he wanted to normalize Indian hate. The third was, just for the record, I was racist before it was cool. And another was, I just want a eugenic immigration policy. Is that too much to ask? This man resigned shortly after that article was published, but you don't recall him being there?
Congressman, I did not recall that individual's name, but that individual was terminated.
He was terminated, okay. Well, I appreciate that. Although it appears that he then later turned up that he was rehired, I guess, and that he's continuing.
Not by Treasury, sir.
Okay, but he was continuing to do work for Doge, but in this instance, HHS and three other departments? You have no idea.
I didn't follow his career.
Okay. Wait, you didn't catch J.D. Vance saying that he didn't think he should be terminated? Did you miss that too?
I don't recall that.
All right. Do you recall Mr. Trump saying that he should have a second chance?
I don't recall that.
No. Okay. And do you recall Mr. Musk saying he should be given a second chance as well?
No, sir.
All right. Well, I guess the main question too here is, what exactly was the vetting practice that you had in place before you brought on these two people and gave them access to the payment system, which is $6 trillion?
Well, sir, they did not have access to the payment system, or perhaps we have a different definition of access. They only had read-only abilities, and they were there for tech support to look at the payment system, the ERP system, just like any private enterprise.
Is this an individual that you would have brought on even in that capacity if you'd known that he'd made these statements prior to him becoming part of that team?
Congressman, that I think it's very difficult to monitor everyone's social media.
That's not what I asked. If you knew that he had made these statements, would you have brought him on in the capacity that he had at the Department of Treasury?
I think the Office of Personnel Management would have flagged that.
Would you have brought him on?
Sir, I'm not going to speculate.
The chair now recognizes the gentleman from New York, Mr. Lalota, for his 5 minutes.
Thank you, Mr. Chairman. Good morning, Mr. Secretary. Good to be with you this morning, sir. I'd like to use my time to talk about taxes and trade. As head of Treasury, you advise the president on taxes and trade, sir?
On both, sir.
Among many other things,
Yes.
of course, yes. And Mr. Secretary, in your estimation, how did President Trump's 2017 signature tax bill affect American job creation, employment, and wage growth?
Mr. Vice Chair, it provided a substantial non-inflationary impetus to the economy, which resulted in real wage gains on a non-inflationary basis for the American people and a robust economy.
I would add, I'm with you 100%. I'd add some data into there. 4.9 million jobs between the passage of the tax bill and the COVID pandemic. Employment rates dropped from the 4s to the 3s, and we had a lot of wage growth, especially within the middle class. And that sets me up for my next question. Congress now is considering extending those tax cuts, which expire at the end of this calendar year. Would that be a good idea, Mr. Secretary?
Congressman, what Congress is considering is making them permanent, which is a better idea.
We're considering a lot on that tax bill. We're also considering SALT, which I think is an awesome idea as well. But nevertheless, on the greater bill, public polling suggests that you're right, and that 8 of 10 Americans agree that extending those tax cuts are a good idea, recognizing that they help grow wages, they help lower employment, and help personal wealth. But I want to use the remainder of my time to talk about trade policy, Mr. Secretary. Is it true that America's trade deficit is about $1.2 trillion?
Approximately, yes, sir.
And with China, Mr. Secretary, about $300 billion?
Yes, and I believe it may have increased slightly.
Yeah. And Mr. Secretary, what impact does China's exploitation of child labor and near slave-like labor, what impact does that have on the trade deficit?
Well, sir, that it creates an unlevel, aside from the values problem that Americans do not believe in this behavior, that it creates an unfair trading advantage. And we can see that from the size of the deficit, but more importantly, from the size of the large surpluses they're accumulating.
And Mr. Secretary, what impact does China's notorious theft of America's intellectual property have on our $300 billion trade deficit?
Well, I think that is a problem for not just the U.S., but for every other country. And to the extent that they are able to leapfrog, whether it's with technology, whether it's with products, then that creates a huge advantage that has given them, it's back to one of the cornerstones of the problem of trade, that if you don't have to spend money on R&D, then you can spend it on manufacturing, cheap manufacturing.
And Mr. Secretary, are tariffs a tool to reduce America's trade deficit, specifically with China?
Yes, sir.
And are they also a tool to protect American jobs, Mr. Secretary?
100%.
And Mr. Secretary, you could probably tell by how far I sit in the dais, I'm somewhat new to Congress, but yet hypocrisy still offends me. And there's a lot of double talk and hypocrisy in this town. I'm going to read you a couple of quotes, Mr. Secretary. I'd like you to tell me if you think President Trump or somebody from the administration has said it, or if you think Senator Schumer has said it on tariffs. Quote, tariffs are a necessary step towards addressing the unfair imbalance of China's trade relationship with the United States. Did Schumer say it or did Trump say it?
I would imagine the president.
Schumer said it, sir. Schumer was just a year ago, in February 2024, talking about tariffs being the answer to combat some of those issues in China, specifically ripping off our intellectual property and exploiting slave labor and child labor.
Well, Congressman, I would also note that the many government officials, including presidents, were also in favor of a border wall until President Trump was.
Good point. That leads me to my second question. Who said it, Schumer or Trump, that tariffs are vital to protect American workers, American manufacturers, American innovation, and our national security? Who said it, Trump or Schumer?
I would imagine it was the ranking member.
It was the Senate Minority Leader, Chuck Schumer, said it. And like what you said, it was cool until Trump got in office, and now he's opposed to it. My time is about to expire, Mr. Secretary, but I want to commend you for fighting for American middle-class workers. I do think that extending the tax bill with a couple of tweaks like SALT is important. I do think that fighting for our middle-class workers are important, and I implore you to stay on the right path, sir.
Good. Thank you, Congressman.
Thank you for getting that SALT plug in, Mr. Lalota, twice. The chair now recognizes the gentleman from Georgia, Mr. Bishop.
Thank you very much, Mr. Chairman. Thank you for being here, Secretary Bessent. I wanted to ask you some questions about the reports that the administration is cutting IRS workforce roughly in half with a goal of 50,000, including many of the frontline enforcement positions. A recent study concluded that this would result in a loss of $19 billion in foregone revenue just in 2026 and up to $350 billion over the next decade. Such substantial cuts in staffing could cause reductions in voluntary compliance as taxpayers will feel emboldened to cheat on their taxes. And an IRS official previously testified that a simple 1% decline in the compliance rate translates into $30 billion in lost revenue for the government. If the administration is truly concerned about reducing the federal deficit, as you indicate, why would it consider staffing reductions that reduce the IRS's capacity to collect much needed revenue that could be used to reduce the deficit or pay for critical services? A recent Treasury Inspector General for Tax Administration's report indicates that the IRS compliance workforce would be drastically hit 31%, with revenue officers 18%. They are paying the maximum taxpayer compliance responsibilities that are needed for revenue for the government. It appears that 31% of the reduction in force, and I think since January, the federal workforce has been reduced, and IRS started out with 103,000, and now it's down to 91,600, which is an 11% reduction in the workforce. That's 31% loss in revenue agents, 18% loss in revenue officers, 10% loss in contact representatives, and 10% loss in tax examiners. It seems to be really, really foolish to pursue that. Can you tell me why that makes sense? Briefly.
Sir, so I think there are two things here. There's the actual decrease that you just cited, which is about 11%. And then if you could tell me where you're getting this number where there's going to be a 40 or 50.
The IG's report.
Sorry?
The IG's report.
There's going to be a 40 or 50% decrease because, sir, I will tell you.
That was the goal.
But before I took this job, I didn't particularly like the term fake news. Now that I have it, I think it's probably not strong enough. Okay, because on March 22nd,
let me change this. Let me change the subject. Let me move to another subject, Mr. Secretary. Thank you. Mm-hmm. If you want to elaborate, you can. You can send us.
I'll be happy to have my office.
Let me say that since this administration has come to the White House, the price of groceries has increased by 0.5% in only 2 months. According to a recent report by the Groundwork Collective, the price of meat, poultry, fish, and eggs has grown the fastest, up 2.9% since January of 2025. Eggs at a record high of $6.23 a dozen, up from 26% in January 25 alone. What is the administration doing to bring down the cost of food? What is the administration doing to ensure that the impact of the tariffs don't disproportionately fall on our nation's farmers? I've got a list of headlines from farmers all across the country that are complaining about the impact of the tariffs on their capacity to sell their products. Can you tell me what the administration is doing to bring down the cost of food?
Well, a couple of things, Congressman. First of all, you may or may not know I am a farmer. Secondly, that we inherited a momentum. Food prices, like monetary policy, have long and variable lead times. The price of eggs was up substantially during the Biden administration. It has been brought down 52% in the past few months. And
it just went up the last 2 months. I just told you.
No, sir. I think that's not 100%.
Since January.
And finally, we are
6%.
We are bringing down energy cost, and energy cost transportation is one of the single biggest factors in food pricing. So diesel prices across the country have come down, and that will result in lower food prices.
Chair now recognizes the gentleman from North Carolina, Mr. Edwards, for any questions he may have.
Thank you, Mr. Chair. Mr. Secretary, thanks for being with us this afternoon. Earlier this year, I co-sponsored a bill, the Anti-CBDC Surveillance State Act, that would prevent the Federal Reserve from issuing central bank digital currency. Many of the folks that I represent are concerned about the security of such a currency and the privacy of their information were such a currency to be used. Can you give me your perspective and maybe the administration's perspective on the place for digital currency?
Sir, we believe that digital assets belong in the private sector. And my personal view is that having a central bank digital currency is a sign of weakness, not strength, because really the reason, if there is a reserve, say a reserve manager or a foreign central bank holds US dollars, then there is a wide variety of US assets they can invest in. You would create a central bank digital currency just for ease of use because there are no good choices for underlying assets.
And so you're saying you would not be in favor of the Federal Reserve issuing such a currency?
No, sir.
Right. Thank you. Can you tell us real quick, at what point do you believe that our debt levels would no longer be sustainable? And then as the second part of that is, what would that look like? If our debt were no longer sustainable, what would that look like to the American family? We talk a lot about debt up here. We put forth some elaborate graphs and charts, and we hear all kind of economists using big, long words. I need to be able to describe to the people back at home what that might look like in their lives were we no longer sustainable.
Well, it would look like a sudden stop in the economy as the credit would disappear, as markets would lose confidence. And I'm committed to that not happening. And again, a tipping point in debt sustainability is very difficult to pinpoint, but what is not difficult to pinpoint is a trajectory. And the trajectory is unsustainable when and if the markets were to rebel against is very difficult to know. I think, just as I talked about the warning track for the X date, I think it's very important not to go on the warning track, and we've got to get to the other side of this and start reducing the debt. And the debt numbers are indeed scary, but the Secretary Yellen and I both agree that it is the debt to GDP that is the important number. So we are trying to both control the absolute level of debt, pay it down, but also grow the GDP.
And so I applaud your approach towards the debt. Give us an idea of where is that tipping point? How close do you think that we might be to that?
Again, sir, I think what the market, having been in markets for 35 or 40 years, what the market is more concerned about is a trajectory. Are you on a trajectory that is unsustainable, or are you, as we said during COVID, bending the curve? So the goal here is to both bend the curve, but to grow the denominator and use growth and spending constraint to solve this problem.
And thank you for that. And as part of the president's cabinet and seeing more inside what's taking place than any of the rest of us, what role would you say that Doge is playing right now in prolonging that tipping point and reversing our fiscal trend?
Well, I think Doge or any other measure to constrain the spending is admirable, important, and necessary. And if we don't do that, as I've said, ranking member, they have mentioned it, we do not have a revenue problem, we have a spending problem, and we have to bring this spending under control.
Thank you. I've got just a few seconds. Can you tell us what keeps you up at night regarding cyber threats to our Treasury system?
Well, it's cyber threats across the entire financial system, sir. And that's why at Treasury, we are leading the effort for more resilience within the entire financial system, whether it's across the banking system, the payment system, and the Treasury system. As you would have seen, Treasury was hacked last year. We've just discovered an OCC hack that discovered last year. So these hacks are real and dangerous.
Thank you, Mr. Chair. I'll yield.
Thank you. The chair now recognizes the ranking member of the full committee, Mrs. DeLauro, for any questions that she may have for 5 minutes.
Thank you very much, Mr. Chairman. My apologies for being late, and apologies to you, Mr. Secretary, but lots of hearings happening here. So just a couple of points, and I want to ask my question. It's just a follow-up on this IRS piece. I think it's very interesting that, well, first of all, I totally disagree with you, Mr. Secretary. We have a revenue problem, and that's where the IRS comes in. And we think about the debt. We think about the $2.3 trillion that was the debt really built up with the tax cuts to the wealthiest and the biggest corporations in 2017. We're now looking at an additional $4.5 trillion in tax cuts, which are making their way to, again, the richest and to the biggest corporations. That is debt. And that is something that I don't know about yourself and others in the administration who refuse to see that kind of debt. And the almost unbelievable piece of this is the IRS 2024. We invested in it, able to recover more than $1.1 billion from roughly 1,600 millionaires. Projected at the time that investments in high-end enforcement data and analytics that an additional $851 billion would result in revenue over the next 10 years. The Inspector General has said IRS lost 30% of auditors under Elon Musk's illegal purge. People who are wanting to ensure that millionaires and billionaires are paying their taxes. And the issue is that we're going to pay for those taxes by taking it out of the hide of Medicaid and of children, of low-wage workers, and of seniors. The issue that I want to try to get to, I'm going to make another point, is your comments on your recent comments that seem to call into question the vitality of the textile industry in the United States and national security. I applaud the administration for the steps they've taken on de minimis and closing down that loophole. I think it was very, very important to do this. We need to go further. It needs to be applied to all countries, not just to China. But unbelievable commentary on the U.S. textile industry. Provides good jobs across this country, particularly in rural areas. The supply chain directly employed 471,000 workers, produced roughly $64 billion in product in 2024. Let me get to my question with only 2 minutes to go here. This is the dealing with is standing up for a mechanism in the U.S. to screen our investments in China, to ensure capital, technology, and know-how are not fueling the capabilities of the Chinese Communist Party. I've had a bipartisan bill to do that for years, helped negotiate the bipartisan bill that nearly passed last year, and I strongly support executive action to address the issue. In fact, we got appropriated funding for Treasury to implement the executive order on outbound investment. Mr. Secretary, I understand that the administration is currently reviewing the executive order. There's a clear bipartisan consensus on the need for an outbound mechanism of that screening regime. Let me ask you, do you support the implementation of such a regime?
Thank you, Congresswoman. This is a very, very important issue. The Outbound Security Program is an important new tool in our effort to restrict the PRC from exploiting U.S. investment. The program just began a few months ago, and we are learning and we anticipate gaining important visibility into U.S. persons' investments involving PRC entities. We appreciate the interest from Congress, and while legislation is important and helpful, I would like some time for our process to inform any legislation. We would like any legislation to be both flexible and durable.
Well, in your confirmation hearing in January, you noted, and this is a quote, we should have a very rigorous screening process for U.S. investments in key sectors that could go to China. And in March, you said, we will make sure that our outbound investment doesn't get used against us. We are going to continue investigating this and where necessary to block it. I heard your answer, and quite frankly, it sounds a little bit wishy-washy. I want to be clear about this. You have expressed support for outbound investment for months now. Has that changed in any way? What's the status of the administration's review of that order? What about the timeline on this, because it's an important issue? And can you commit that your department will enforce this executive order to its fullest extent?
I have not changed my position. As I said, we are looking at what is working, what isn't, and how the best enforcement mechanisms. And when a bill comes forward, again, we want it to be fulsome and durable, and a 2025 bill for all the nuance that goes with this.
Well, I'm out of time, but please understand, we have bipartisan support. It made it into the continuing resolution, but for the influence of Mr. Musk, and it is critically important for our competitive edge. And I don't believe there's any reason for the administration to roll back. My hope is that we will move forward and keep the pressure on in order to be able to preserve our competitive advantage and not cede to the Chinese economy.
We're in complete agreement.
Thank you. Thank you, Mr. Chairman.
I would not want to interfere with that bipartisan moment.
Okay. And it's bipartisan legislation, as you know.
I appreciate
Great
that.
piece of legislation.
And the chair will now recognize the gentleman from Nevada, Mark Amade, for 5 minutes of question.
Thank you, Mr. Chairman. Hi, Mr. Secretary. First of all, I want to thank you for your availability during this time since you've been confirmed and stuff like that. I know nothing's been going on that affects the Treasury Department in any way, and I appreciate having access to you via phone over an issue that wasn't important. So, thank you very much. I want to just ask you a couple of questions, kind of relative to our conversation, and that is, I know that the president has said quit producing the penny. A lot of reasons, arguably you lose 2.5+ cents for every penny you produce in signerage, and you don't have to get up too early to do the math on that sort of thing. But I think in the timing of doing that, if we're going to eliminate the penny, which has to happen here, I would like to know who it is, who's kind of the tip of the spear on your staff at Treasury. I already have the Mint information, but at Treasury, as far as those issues go, and I'll tell you why I want to know is, I think there are some issues regarding what it costs to produce a penny. I don't know if it's going to get you. I don't think it'll get you down to a cent, so it won't be that argument. But quite frankly, stacked up behind it is what it costs to produce a nickel and what it costs to produce a dime. I don't know about the quarter, but anyhow, to make sure that we are at least giving your department and the Bureau of the Mint the most tools necessary to, if you will, untie their hands when they're looking for who they buy their blanks from and stuff like that, that goes directly into what it costs to produce one. So my first question is, who's kind of in charge of that, since I know you've got other things to do, but ultimately, so that we can start that dialogue with where do we go from here, and if we're going to get rid of, and I know there's been legislation introduced in the Senate to get rid of the penny altogether except for collectors. So who's the point man or woman on your staff?
Congressman, it would be my recently confirmed deputy, Mike Faulkner.
Okay.
And I would also say, with the nickel and the dime, the nickel costs more than a nickel to produce, but we are looking at material changes in the materials that would reduce the cost to or below a nickel, and then I believe the dime is profitable.
And I guess that brings me to there is legislation you might want to warn your recently confirmed deputy. HR 1278, bipartisan, gives you guys the chance, without coming to us every time, to basically make changes in the metal of that sort of stuff so that you can keep ahead of those sorts of things. So if you would, unless it's sitting here, whatever, it's like, hey, we're going to be calling you up. The idea is to solve the problem if it's solvable and move on from there so you guys can do other things with your time.
Yes, sir. We've been reviewing that.
Good. Glad to hear that. So have you taken a look at the Senate bill that says no more pennies? And I guess other countries have rounded up to the nearest 5 cents. And my research says, well, it wasn't the end of the world. So
Well, sir, we are also encouraging rounding down.
okay, that's good. Great answer. You know what? I'm going to reward good performance. I yield back, Mr. Chairman.
Certainly appreciate that, Mr. Amade. I understand you have the hard stop at 11:30. I'd like to honor that. I want to be fair to my fellow committee members, though. In doing so, not all of us will be eligible for a second round, but it certainly, my ranking member, Mr. Hoyer, would request that he have a chance to ask you another question before the stop.
Mr. Secretary, first of all, let me say that I believe the Congress is being taken for granted in the policies being pursued. I think, frankly, some illegal things are being done. Not by you, I'm just talking about the administration in terms of federal employees. I represent 77,000 federal employees who came here to work for the government, and that's why they're here. I've worked very well with Republicans throughout my career, which is now in its 45th year. I want to do that some more because I think that's in the best interest of the country. I believe you're one of those who has a shot at keeping us on a somewhat even keel. I mean that as a compliment, but obviously it's also a concern. When you say, and I want to reiterate this, that we have a spending problem, and I retort to you, no, what we have is a paying for problem. If I make $1 million, I can spend $999,000 less taxes. But if I make $500,000, I spend $1 million. That is a paying problem because I don't pay for it and I accumulate debt. That's how debt goes. Now, I was here in the Reagan administration some period of time ago. We were told that the tax cuts that were passed in 1981 were going to pay for themselves. They did not. It perhaps will surprise you, maybe you know this figure. The largest increase in the national debt was under Ronald Reagan, the only president who had a triple-digit, 189% increase in the national debt during the course of his term. It might also surprise you that Clinton is the only one who was 30% or lower since Ronald Reagan. Clinton is the only one who balanced the budget. Now, one of the reasons we did so is because we had bipartisan objectives. The Republicans wanted to cut taxes, which is their mantra, and we wanted to invest, as we call it, as opposed to spending, in children's education and people's health care, in safety, et cetera, et cetera. If we continue this logic that we have a spending problem and discount taxes as spending, when we did the tax increase under in 2017, you may recall, the Republicans gave themselves a $1.5 trillion headroom. The reason it was limited to that is because the senator from Tennessee wouldn't go higher than that. So in other words, a $1.5 trillion unpaid for headroom to give a tax cut. That is spending because you're cutting prices while increasing costs. That's what causes deficits. Some of my Republican friends, I'm a strong supporter of national defense, but I do not delude myself that raising $150 billion in national defense expenses don't cost taxes. We don't have $150 billion to either cut taxes with or to spend money with, so we borrow. And when my friend talks about hypocrisy, we all know if you spend more than you get, you go into debt. And that's what we do as a country on both sides of the aisle. And we need people like yourself to be honest with those with whom you work and honest with the Congress of the United States in terms of the ramifications of the actions. I know you are a strong supporter of permanent increase. You're not a strong supporter of paying for it. And you can cut all of non-defense discretionary spending and you won't get there. And this game that Mr. Musk has played, he had no sense of the ramifications of the actions he's taken. He knew how to do it. He was prepared. As one article of the Atlantic Journal said, the blitzkrieg, which our speaker calls flooding the zone, been pretty effective at that, just trying to watch where the ball is and see if you can respond. But Mr. Secretary, I have a lot of questions. I'm going to send them to you, ask them to you, and would like to take some time with you on that. I have great respect for your background and your abilities. And I am really praying that you will bring a voice of reason and rationality to our deliberations. My time is over, and I appreciate the chairman's forbearance. But this is serious business. Very serious business. And I agree with you. A $37 trillion debt is not sustainable. And we all have to do it, but we have to do it together. That's the only way it will get done. Thank you, Mr. Chairman.
Thank you. You have a response, Mr. Secretary?
Congressman, thank you for that. And I would note that while President Reagan substantially increased the defense budget, the Clinton administration was able to capitalize on the peace dividend. But as you said, the defense budget dropped dramatically post the fall of the Iron Curtain, which contributed to the fiscal soundness. And through, as you said, through bipartisanship, working with Speaker Gingrich, they worked together. So I would hope that we could do that again.
Which, by the way, cost Gingrich's job. The right wing of his party was incensed that he did that. And what it did was had a rational policy because both sides participated.
So, the senator from Tennessee is actually my neighbor. So I see him quite often. And look, there are ramifications here. And
you're not talking about any current senators from Tennessee. He's left.
No, I know.
Yeah, okay.
Senator
I want
Corker.
to make sure we had the right Tennessean.
Senator Corker.
Yes.
Yes. Is my neighbor.
Uh-huh.
So, and I look forward to inviting a bipartisan solution.
Thank you, sir. And with that, our time is concluded. I'd like to thank you, Secretary Bessent, for being here today. There may be some members, as the Ranking Member Hoyer has indicated, who have questions. They're going to submit those questions for the record. And we ask any of you to please submit those questions to the subcommittee staff within the next 7 days. I would ask that you try to respond to them within the next 15 business days after receipt. Thank you. With that, the subcommittee stands adjourned.
Thank you.